Maybe you've heard the Federal Reserve's effort to cool inflation by raising interest rates has not proven to be as effective as hoped.
Some economists say that the reason could be that some companies are taking advantage of an opportunity to increase their profits. While supply chain disruptions caused by the pandemic and the invasion of Ukraine by Russia have pushed costs higher in recent years, studies have found that several companies have raised prices far above those cost increases, and this is especially true for goods and services, which describes almost everything. An article in the Wall Street Journal last week explains how this works and how it is affecting the price you pay at the checkout counter.
Joining us now is the author of that article, Wall Street Journal reporter Paul Hannon. Paul, folks will read that and feel like it's another punch in the gut, right? You're already paying excessively high prices, and it seems as though you're finding that this isn't just companies raising prices and customers going to a competitor where prices have not gone up. There's something intentional happening here. Explain that.
Hi. Yeah, well, you referred to the increase in costs. I mean, all of us know that this has happened, right? So you're inclined to be a bit more forgiving when you see, the price of something that you regularly buy going up. You assume that, a competing item has probably gone up too. And the businesses that are competing with each other are kind of able to securely assume that their rivals are going to be raising prices. So there's an opportunity there to test the limit to see how far they can go. And some have found that they can go beyond the initial cost increase, that in this period when things are very uncertain, consumers can't be sure that they're being taken advantage of. They can't be sure that there's an alternative that hasn't gone up in price. And they've managed to push up their profits. And that in turn pushes up inflation.
Yeah. And then, of course, people like us on TV and writers for newspapers and magazines, people on social media talk about how it's bad out there, people. There's a lot of pain. And then people come to expect that pain. They see a higher price and they think, that's just the way it is now. And little do they know that the corporation is taking a bigger chunk of profit than they were in the past. I'm surprised, Paul, I have to say, to read this article in the Wall Street Journal, because typically Wall Street Journal reporting does not find itself in coming to the same conclusion as people like progressive Senator Elizabeth Warren, progressive think tank, the Economic Policy Institute. Well, they've been saying that companies are using the pandemic and inflation to jack profits. They've been saying it for months, and now it seems like maybe it's true. What's going on here?
Look, I can't talk about the politics. I'm an economics reporter, and I write about what I see and what my sources and what academic economists largely are seeing. I mean, I'd caution kind of going too far into the doing this on purpose and taking advantage kind of way of thinking about it. I think they've had an opportunity and they've taken it, but it may not last very long. And it may be motivated in part by the knowledge that bad times are coming, and they want to sort of boost their profits in advance of that. And also because during the pandemic years, during the years of supply disruption, there were a lot of challenges and these companies did not all make a huge amount of money. So the situation I'm describing, or we're describing, is very much sort of a 2022 thing. We're not entirely sure that this is going to continue into 2023, much further into 2023. And actually, since you talk about the role of the media, that's partly because we're having these conversations now. The more people talk about the possibility that, a boost in profits is involved here, maybe the less tolerant consumers will become of this behavior. And businesses themselves will know that. I mean, they don't want to alienate their consumers long term. So, maybe this doesn't last too much longer, but I think it's definitely been a feature of the last 9 months to a year.
Yeah, I mean, Paul, you're legitimizing the concept of profit gouging. You're saying here that some companies are testing the limit. Help our viewers understand specifically where, though. Where are you seeing some of the worst offenders right now?
I think, broadly in the kind of direct-to-consumer goods area. I mean, that's where you have an opportunity, I think, to tell a story, which is about that hit to your cost base. And, people sort of will behave slightly differently in this period. That, I think, is mainly where you're seeing it. further up the kind of supply chains, I mean, you're dealing with one business selling to another business, and maybe they're a little bit better informed than we are. I mean, one of the things that's sort of surprising about this whole situation is how little we know about how much it costs to make things. You can see these margins being boosted at a company level and even product lines, but actually it's pretty hard to pin it down to, that thing that you have, in your cupboard, because you just do not know how much that costs to make and market, and how much that's changed over the last sort of 6 months to 9 months.
I do know it takes a lot to make and market the Wall Street Journal, which is packed full of information, which is why I am a subscriber. I should have said that earlier. Paul Hannon, it's really a thrill to talk to you.
Yeah. Thanks for breaking it all down for us, Paul.
Thank you very
Take
much.
care.